Let's get ready for the California real estate exam with 100 questions covering state-specific laws, principles, and practices you'll need to know. And don't miss what's happening in the bottom corner. It could be key to your exam prep. We'll tell you how in a minute. Now, let's get started.
Let's start with a review of some California real estate laws and regulations. Overview of California real estate statutes. What is the primary purpose of the California real estate law? Is it A, to protect consumers by regulating real estate professionals? B, to increase real estate prices? C, to provide tax benefits to real estate agents? Or D, to limit the number of real estate transactions? The answer is A, to protect consumers by regulating real estate professionals. The California real estate law aims to protect consumers by regulating the licensing and conduct of real estate professionals. It establishes standards and procedures for real estate transactions to ensure fairness and transparency. Which entity is responsible for enforcing real estate laws in California? Is it A, California State Bar? B, California Department of Real Estate? C, California Department of Finance? Or D, California Real Estate Board? The answer is B, California Department of Real Estate. The California Department of Real Estate is responsible for enforcing real estate laws. It oversees licensing, investigates complaints, and ensures compliance with state statutes.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which of the following actions is considered a violation of the California real estate law? Is it A, offering a property at market value? B, disclosing all known property defects? C, misrepresenting property details in a transaction? Or D, negotiating commission rates with clients? The answer is C, misrepresenting property details in a transaction. Misrepresentation in a real estate transaction is a violation of California real estate law, as it undermines trust and transparency essential for fair dealings in the market. How does the California real estate law protect consumers in real estate transactions? Is it A, by requiring full disclosure of material facts? B, by setting fixed property prices? C, by mandating fixed commission rates? Or D, by providing free legal representation? The answer is A, by requiring full disclosure of material facts. The law mandates full disclosure of material facts about properties, ensuring that consumers are well informed and can make decisions based on complete and accurate information. What is the role of the Real Estate Recovery Fund in California? Is it A, to fund real estate education programs? B, to support real estate market research? C, to provide loans to first-time homebuyers? Or D, to compensate victims of licensee fraud or misrepresentation? The answer is D, to compensate victims of licensee fraud or misrepresentation. The Real Estate Recovery Fund compensates consumers who suffer losses due to a licensee's fraud or misrepresentation, providing financial protection to the public. California-specific fair housing laws. Which of the following is a protected class under California's Fair Employment and Housing Act that is not explicitly protected under the Federal Fair Housing Act? Is it A, race? B, gender identity? C, national origin? Or D, religion? The answer is B, gender identity. California's Fair Employment and Housing Act provides protection against discrimination based on gender identity and expression, which is not explicitly covered by the Federal Fair Housing Act. In California, which agency is primarily responsible for enforcing fair housing laws? Is it A, Department of Real Estate, B, California Housing Finance Agency, C, Department of Fair Employment and Housing, or D, U.S. Department of Housing and Urban Development? The answer is C, Department of Fair Employment and Housing. The California Department of Fair Employment and Housing is the primary agency responsible for enforcing fair housing laws in California, ensuring compliance with state regulations. Under California's fair housing laws, what is the statute of limitations for filing a discrimination complaint with the Department of Fair Employment and Housing? Is it A, 1 year, B, 6 months, C, 2 years, or D, 90 days? The answer is A, 1 year. The statute of limitations for filing a housing discrimination complaint with the DFEH is 1 year from the date of the alleged discriminatory act. Which of the following practices is prohibited by California fair housing laws? Is it A, offering different terms based on credit score, B, providing different amenities based on lease agreements, C, setting different rental prices based on unit size, or D, blockbusting? The answer is D, blockbusting. Blockbusting, or inducing homeowners to sell by suggesting that people of a certain race are moving into the neighborhood, is prohibited under California fair housing laws. Which group is protected under California's fair housing laws but not explicitly mentioned in the Federal Fair Housing Act? Is it A, familial status, B, disability, C, sexual orientation, or D, color? The answer is C, sexual orientation. California's fair housing laws protect individuals based on sexual orientation, which is not explicitly covered by the Federal Fair Housing Act. California-specific contract requirements. What is the required time frame for a seller to provide a transfer disclosure statement to a buyer in California? Is it A, within 3 days of signing the purchase agreement, B, as soon as practicable before the transfer of title, C, after the inspection contingency is removed, or D, within 10 days of closing? The answer is B, as soon as practicable before the transfer of title. In California, sellers must provide the transfer disclosure statement to buyers as soon as possible before the transfer of title. This ensures transparency and allows buyers to make informed decisions. Which document is crucial for disclosing potential environmental hazards on a property in California? Is it A, purchase agreement, B, title report, C, natural hazard disclosure statement, or D, home inspection report? The answer is C, natural hazard disclosure statement. The natural hazard disclosure statement informs buyers about potential environmental hazards such as flood zones and earthquake fault lines, ensuring they are aware of risks associated with the property. In California, which party is typically responsible for paying the documentary transfer tax? Is it A, seller, B, buyer, C, real estate agent, or D, title company? The answer is A, seller. The seller typically pays the documentary transfer tax in California, although this can be negotiated in the contract. This tax is based on the property's sale price. What is the purpose of the California Residential Purchase Agreement? Is it A, to list the property on the market, B, to provide a property appraisal, C, to transfer ownership of the property, or D, to outline the terms and conditions of the sale? The answer is D, to outline the terms and conditions of the sale. The California Residential Purchase Agreement outlines the terms and conditions of the property sale, including price, contingencies, and closing date, ensuring both parties have a clear understanding of the agreement. Under California law, when must the notice of default be recorded in a foreclosure process? Is it A, immediately after a missed payment? B, after 15 days of delinquency? C, after 30 days of delinquency? Or D, only after 60 days of delinquency? The answer is C, after 30 days of delinquency. The notice of default must be recorded after a borrower is at least 30 days delinquent on mortgage payments, initiating the foreclosure process. This notice informs the borrower of the default and the lender's intent to foreclose.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Next, let's look at California licensing requirements and procedures. California licensing requirements and procedures. What is the minimum age requirement to obtain a real estate salesperson license in California? Is it A, 18 years, B, 21 years, C, 16 years, or D, 25 years? The answer is A, 18 years. In California, individuals must be at least 18 years old to qualify for a real estate salesperson license. This requirement ensures that applicants are legally recognized as adults and capable of entering into binding contracts. Which of the following is a required step to renew a real estate license in California? Is it A, paying a renewal fee only, B, submitting a new application, C, completing continuing education courses, or D, passing a new licensing exam? The answer is C, completing continuing education courses. To renew a real estate license in California, licensees must complete continuing education courses. This ensures they stay informed about changes in laws and practices relevant to real estate. What is the maximum time allowed to complete the pre-licensing courses before applying for a California real estate salesperson license? Is it A, 12 months, B, 18 months, C, 24 months, or D, 36 months? The answer is B, 18 months. California requires that pre-licensing courses be completed within 18 months of applying for the real estate salesperson exam. This ensures that applicants have current knowledge of the required material. Which of these documents is necessary when applying for a California real estate broker license? Is it A, a letter of recommendation, B, a college degree, C, a birth certificate, or D, proof of work experience? The answer is D, proof of work experience. An applicant for a California real estate broker license must provide proof of work experience, demonstrating their practical knowledge and readiness to operate as a broker. What is the first step in the process of obtaining a real estate salesperson license in California? Is it A, complete the required pre-licensing education, B, submit fingerprints for a background check, C, apply for the state licensing exam, or D, register with a sponsoring broker? The answer is A, complete the required pre-licensing education. The first step to obtaining a real estate salesperson license in California is to complete the required pre-licensing education. This ensures that applicants have foundational knowledge before proceeding with the examination and application process. Which agency is responsible for issuing real estate licenses in California? Is it A, California Department of Business Oversight, B, California Real Estate Commission, C, California Department of Real Estate, or D, California Association of Realtors? The answer is C, California Department of Real Estate. The California Department of Real Estate is responsible for issuing real estate licenses. They oversee the licensing process, ensuring compliance with state regulations and maintaining professional standards in the industry. Continuing education requirements. What is the minimum number of continuing education hours required for a real estate license renewal in California? Is it A, 30 hours, B. 60 hours, C. 45 hours, or D. 50 hours? The answer is C. 45 hours. California requires real estate licensees to complete 45 hours of continuing education every 4 years to renew their licenses. This ensures professionals remain updated with industry standards and regulations. Which of the following topics is not required as part of the continuing education for California real estate license renewal? Is it A. Ethics, B. Office management, C. Trust fund handling, or D. Fair housing? The answer is B. Office management. California requires courses in ethics, agency, trust fund handling, and fair housing. Topics unrelated to these core areas are not mandatory for continuing education. How often must a California real estate licensee complete their continuing education requirements? Is it A. Every 4 years, B. Every 5 years, C. Every year, or D. Every 2 years? The answer is A. Every 4 years. California real estate licensees must complete 45 hours of continuing education every 4 years to renew their licenses, ensuring they stay informed about changes in laws and practices. Which entity is responsible for setting the continuing education requirements for California real estate licensees? Is it A. California Association of Realtors, B. National Association of Realtors, C. California State Legislature, or D. California Department of Real Estate? The answer is D. California Department of Real Estate. The California Department of Real Estate sets the continuing education requirements to ensure licensees maintain competency and knowledge of real estate laws and practices. What specific continuing education course must be completed by all California real estate licensees as part of their 45-hour requirement? Is it A. Ethics, B. Marketing strategies, C. Real estate investment, or D. Advanced property management? The answer is A. Ethics. Ethics is a mandatory course in the continuing education program to ensure all licensees uphold integrity and professionalism in their practice. Next, we'll look at California property ownership and land use. Types of property ownership. In California, what type of property ownership allows an individual to own a property outright with the highest degree of control and rights? Is it A. Leasehold, B. Fee simple, C. Joint tenancy, or D. Tenancy in common? The answer is B. Fee simple. Fee simple ownership grants the owner the most rights, including the ability to sell, lease, or bequeath the property. It is the most common and absolute form of ownership in California. Which form of property ownership in California includes the right of survivorship, meaning that upon the death of one owner, the property automatically passes to the surviving owner? Is it A. Community property, B. Tenancy in common, C. Joint tenancy, or D. Fee simple? The answer is C. Joint tenancy. Joint tenancy includes the right of survivorship, ensuring that the property passes to the surviving joint tenant without probate, making it a popular choice for co-owners. What type of property ownership allows tenants to hold an unequal share of a property and freely transfer their interest without the consent of other co-owners? Is it A. Joint tenancy, B. Leasehold, C. Community property, or D. Tenancy in common? The answer is D. Tenancy in common. Tenancy in common allows co-owners to hold different percentages of ownership and transfer their shares independently, offering flexibility in ownership interests. Which type of property ownership in California is most commonly associated with married couples and allows for equal ownership interests? Is it A. Community property, B. Tenancy in common, C. Fee simple, or D. Joint tenancy? The answer is A. Community property. Community property is a form of ownership for married couples where both spouses have equal ownership interests in property acquired during the marriage, promoting shared control. In California, which type of property ownership involves a temporary right to occupy land, typically under a rental agreement, without ownership of the land itself? Is it A, fee simple, B, leasehold, C, joint tenancy, or D, community property? The answer is B, leasehold. Leasehold estates grant tenants the right to occupy and use land for a specified period under a lease agreement without any ownership interest in the property.
Stuck on a question? Just think of the Birdsy link in the description as your friendly neighborhood superhero swooping in to save the day with answers. Feel free to explore it now and return to continue. Simply hit pause, and we'll be waiting when you get back.
Public versus private land use controls. Which of the following is a primary function of zoning laws in California? Is it A, to control property taxes, B, to manage water rights, C, to regulate land use and development, or D, to enforce building codes? The answer is C, to regulate land use and development. Zoning laws regulate land use to ensure orderly development and prevent conflicts between incompatible uses, such as industrial and residential areas. They help maintain property values and community welfare. What is the primary purpose of an easement in California property law? Is it A, to transfer property ownership, B, to allow limited use of another's property, C, to subdivide a property, or D, to increase property taxes? The answer is B, to allow limited use of another's property. An easement grants a non-owner the right to use part of another's property for a specific purpose, such as access or utilities, without owning it. Which government entity typically enforces zoning regulations in California? Is it A, local government, city or county, B, state government, C, federal government, or D, homeowners associations? The answer is A, local government, city or county. Local governments, such as city or county planning departments, are responsible for enforcing zoning regulations to ensure compliance with community development plans. What is a variance in the context of California zoning laws? Is it A, a change in property tax classification, B, a new zoning category, C, a type of easement, or D, an exception to zoning regulations? The answer is D, an exception to zoning regulations. A variance is an exception to zoning laws granted by local authorities, allowing property owners to deviate from certain regulations due to unique circumstances. How do private land use controls, such as CC&Rs, differ from public zoning laws? Is it A, they are enforced by state agencies, B, they override public zoning laws, C, they are private agreements, not public laws, or D, they apply only to commercial properties? The answer is C, they are private agreements, not public laws. CC&Rs, covenants, conditions, and restrictions, are private agreements imposed by developers or HOAs, while zoning laws are public regulations enforced by local governments. Land use and zoning laws. What is the primary purpose of zoning laws in California? Is it A, to regulate land use and ensure orderly development, B, to increase property taxes, C, to reduce environmental impact, or D, to enhance property aesthetics? The answer is A, to regulate land use and ensure orderly development. Zoning laws are designed to control land use, ensuring that property development aligns with community goals, safety, and aesthetics. They help separate incompatible land uses, such as residential and industrial areas. Which of the following is a characteristic of a non-conforming use in zoning? Is it A, it is always illegal and must be removed immediately, B, It was established legally before the current zoning laws. C. It can be expanded without restrictions. Or D. It is exempt from all future zoning changes. The answer is B. It was established legally before the current zoning laws. A non-conforming use occurs when a property's existing use does not comply with current zoning laws, but is allowed because it existed before the new regulations were enacted. What is the role of a variance in California zoning laws? Is it A, to change the zoning classification of a property? B, to enforce zoning laws more strictly? C, to permit a deviation from zoning requirements? Or D, to approve new zoning regulations? The answer is C, to permit a deviation from zoning requirements. A variance allows property owners to deviate from strict zoning requirements due to unique circumstances without changing the overall zoning of the area. It is granted by a zoning board. How does California's Coastal Act influence land use and zoning? Is it A, it primarily focuses on increasing tourism? B, it allows unrestricted development along the coast? C, it restricts all forms of development? Or D, it regulates land use to protect coastal resources? The answer is D. It regulates land use to protect coastal resources. The Coastal Act regulates land use in the coastal zone to protect natural resources, ensure public access, and balance development with environmental conservation. It is a key component of California's land use planning. What is the significance of a general plan in California land use planning? Is it A, it outlines a community's long-term development goals? B, it is used to increase property taxes? C, it is a mandatory document for property sales? Or D, it sets zoning laws for specific properties? The answer is A, it outlines a community's long-term development goals. A general plan serves as a blueprint for future growth and development in a community, guiding land use decisions to align with long-term goals for housing, transportation, and environmental conservation. Condominiums and HOAs. What is the primary purpose of a homeowners association in a California condominium complex? Is it A, to provide individual property insurance for each unit owner? B, to manage common areas and enforce community rules? C, to offer legal advice to homeowners? Or D, to handle all personal disputes between neighbors? The answer is B, to manage common areas and enforce community rules. The HOA manages the common areas, enforces rules, and ensures maintenance and financial stability of the condominium. It acts as a governing body to maintain the quality and value of the property. Which document typically outlines the responsibilities and rights of owners in a California condominium association? Is it A, covenants, conditions, and restrictions? B, articles of incorporation? C, bylaws? Or D, operating budget? The answer is A, covenants, conditions, and restrictions. The CC&Rs, covenants, conditions, and restrictions, document outlines the responsibilities and rights of owners. It governs the use, maintenance, and appearance of the property. In a California condominium, who is typically responsible for maintaining the exterior of the building? Is it A, individual unit owners? B, property management company? C, homeowners association? Or D, local government? The answer is C, homeowners association. The HOA is generally responsible for maintaining the exterior of the building, as it is considered a common area. This includes tasks like painting and roof repairs. What is a common consequence if a unit owner fails to pay their HOA dues in a California condominium? Is it A, loss of voting rights in the HOA? B, increase in monthly dues for all owners? C, reduction in property taxes? Or D, a lien placed on the property? The answer is D, a lien placed on the property. If a unit owner fails to pay their HOA dues, the HOA may place a lien on their property, which can lead to foreclosure if not resolved. How does the Davis-Sterling Act impact condominium associations in California? Is it A, it regulates property tax assessments, B, it provides a legal framework for HOA governance, C, it mandates insurance coverage for each unit owner, or D, it determines the zoning laws for condominiums? The answer is B, it provides a legal framework for HOA governance. The Davis-Sterling Act provides a comprehensive framework for the governance of common interest developments, including condominiums, ensuring fair and consistent management practices. Environmental issues. What is the primary purpose of the California Environmental Quality Act? Is it A, to regulate property taxes, B, to assess and mitigate environmental impacts, C, to enforce zoning laws, or D, to provide funding for environmental projects? The answer is B, to assess and mitigate environmental impacts. CEQA aims to prevent environmental damage by requiring state and local agencies to identify and mitigate the environmental impacts of their actions. It ensures public involvement in the decision-making process. Which of the following is a key feature of a conservation easement in California? Is it A, allows unrestricted development, B, mandates public access, C, restricts land use to protect resources, or D, increases property taxes? The answer is C, restricts land use to protect resources. Conservation easements restrict land use to protect its conservation values. They are voluntary agreements that limit certain types of development or land use to preserve natural resources. How does the California Coastal Act impact property development? Is it A, requires permits for coastal development, B, eliminates the need for environmental reviews, C, allows unrestricted coastal construction, or D, focuses solely on housing affordability? The answer is A, requires permits for coastal development. The California Coastal Act regulates land use in the coastal zone, requiring permits for development to ensure environmental protection and public access to the coast. What role does the California Land Conservation Act, Williamson Act, play in land use? Is it A, promotes urban development, B, increases property tax rates, C, mandates industrial zoning, or D, provides tax relief for agricultural land? The answer is D, provides tax relief for agricultural land. The Williamson Act provides tax relief to landowners who agree to use their land for agriculture or open space, encouraging the preservation of agricultural land and open spaces in California. Which agency is primarily responsible for enforcing air quality standards in California? Is it A, California Coastal Commission, B, California Air Resources Board, C, Department of Water Resources, or D, Department of Housing and Community Development? The answer is B, California Air Resources Board. The California Air Resources Board is responsible for enforcing air quality standards, regulating emissions, and ensuring compliance to protect public health and the environment. Let's continue with California agency law and ethics. Agency relationship laws. What is the primary duty of a real estate agent under California agency law when representing a client? Is it A, fiduciary duty to the client, B, duty to maximize commission, C, duty to disclose all offers to the client, or D, duty to maintain confidentiality of all parties? The answer is A, fiduciary duty to the client. Under California agency law, the primary duty of a real estate agent is fiduciary duty. This includes loyalty, obedience, disclosure, confidentiality, reasonable care, and accounting, ensuring the client's interests are prioritized. In California, when must a real estate agent disclose their agency relationship to a prospective buyer? Is it A, after the buyer signs a purchase agreement, B, at the closing of the sale. C, at the first substantive contact. Or D, only if the buyer asks about it. The answer is C, at the first substantive contact. California law requires real estate agents to disclose their agency relationship as soon as practicable, typically at the first substantive contact with the prospective buyer, to ensure transparency. What is dual agency in California real estate transactions? Is it A, when two agents from different brokerages represent the buyer and seller? B, when one agent represents both the buyer and seller? C, when an agent represents multiple buyers for the same property? Or D, when an agent refers a client to another agent? The answer is B, when one agent represents both the buyer and seller. Dual agency occurs when one agent or brokerage represents both the buyer and seller in a transaction. This is legal in California, but requires full disclosure and consent from both parties. Which of the following is not a duty owed by a real estate agent to their client under California law? Is it A, B, disclosure, C, confidentiality, or D, promoting personal interests? The answer is D, promoting personal interests. While promoting personal interests is not a duty, agents must uphold fiduciary duties such as loyalty, disclosure, and confidentiality, ensuring the client's best interests are always prioritized. What is required from a client for an agent to legally establish an agency relationship in California? Is it A, verbal agreement only, B, payment of a retainer fee, C, mutual consent, often in writing, or D, a formal contract signed by a notary? The answer is C, mutual consent, often in writing. An agency relationship requires mutual consent, typically formalized through a written agreement, ensuring both parties understand the agent's role and responsibilities.
Notice the code in the corner? When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Fiduciary duties and client representation. What is a fiduciary duty in the context of California real estate agency? Is it A, a duty to act in the best interest of the client? B, a duty to prioritize personal financial gain? C, a duty to follow all client instructions without question? Or D, a duty to maintain neutrality between buyer and seller? The answer is A, a duty to act in the best interest of the client. A fiduciary duty requires agents to act in the best interest of their clients, maintaining loyalty, confidentiality, and full disclosure. This duty is fundamental in ensuring trust and integrity in client-agent relationships. Which of the following actions would violate an agent's fiduciary duty of loyalty? Is it A, disclosing all material facts about a property? B, recommending a property based on the client's stated preferences? C, purchasing a property the client is interested in for personal gain? Or D, negotiating the best possible price for the client? The answer is C, purchasing a property the client is interested in for personal gain. An agent must avoid conflicts of interest and not profit at the client's expense. Self-dealing, or any action that benefits the agent over the client, breaches this duty. How does the duty of confidentiality apply in California real estate transactions? Is it A, agents must disclose all client information to potential buyers? B, agents must keep client information private unless required by law? C, agents can share client information with other agents freely? Or D, agents are only required to maintain confidentiality during the transaction? The answer is B, agents must keep client information private unless required by law. Confidentiality requires agents to protect sensitive client information unless disclosure is legally required. This duty extends beyond the termination of the agency relationship. What is the duty of full disclosure in California real estate agency? Is it A, the obligation to disclose only financial details? B, the duty to reveal only positive aspects of a property? C, the requirement to disclose client personal information? Or D, the obligation to inform clients of all material facts affecting the transaction? The answer is D, the obligation to inform clients of all material facts affecting the transaction. Full disclosure mandates that agents inform clients of all facts that could affect their decisions. This includes any information that might influence the client's actions regarding the transaction. What should an agent do if a conflict of interest arises in a transaction? Is it A, ignore the conflict and proceed with the transaction? B, terminate the agency relationship immediately? C, disclose the conflict to the client and seek their consent? Or D, offer to reduce commission to compensate for the conflict? The answer is C, disclose the conflict to the client and seek their consent. Agents must disclose any conflicts of interest to their clients and obtain consent to proceed. Transparency is crucial to maintain trust and uphold fiduciary duties. California Ethics Guidelines and Enforcement. What is the primary purpose of the California Real Estate Ethics Guidelines? Is it A, to increase sales for real estate agents? B, to maintain high standards of conduct in the industry? C, to reduce the number of licensed agents? Or D, to simplify the licensing process? The answer is B, to maintain high standards of conduct in the industry. The California Real Estate Ethics Guidelines aim to ensure that real estate professionals maintain high standards of conduct, protecting both the public and the integrity of the real estate industry. Which entity is responsible for enforcing ethics guidelines in California real estate? Is it A, National Association of Realtors? B, California Real Estate Board? C, California Department of Real Estate? Or D, Federal Trade Commission? The answer is C, California Department of Real Estate. The California Department of Real Estate is tasked with enforcing ethics guidelines, overseeing compliance, and ensuring that real estate professionals adhere to legal and ethical standards. Under California ethics guidelines, what is the duty of disclosure? Is it A, inform clients of all material facts? B, keep all client information confidential? C, maximize the agent's commission? Or D, ensure the lowest price for the buyer? The answer is A, inform clients of all material facts. The duty of disclosure requires agents to inform clients of all material facts that could affect a transaction, ensuring transparency and informed decision-making by the client. What consequence might a real estate agent face for violating California ethics guidelines? Is it A, increased sales targets? B, mandatory ethics training? C, promotion to a higher position? Or D, license suspension or revocation? The answer is D, license suspension or revocation. Violations of ethics guidelines can result in disciplinary actions by the DRE, including fines, suspension, or revocation of a real estate license, depending on the severity of the infraction. How do California ethics guidelines impact client-agent relationships? Is it A, they promote trust and transparency? B, they limit communication between parties? C, they allow agents to prioritize personal gain? Or D, they reduce the need for written contracts? The answer is A, they promote trust and transparency. Ethics guidelines foster trust and transparency in client-agent relationships by ensuring agents act in the best interest of their clients, providing honest and accurate information throughout the transaction process. Now let's review California real estate financing. Mortgage loans and financing options. What is the primary purpose of a mortgage insurance premium in FHA loans? Is it A, to protect lenders from losses if the borrower defaults? B, to reduce the interest rate on the loan? C, to cover closing costs for the borrower? Or D, to eliminate the need for a down payment? The answer is A, to protect lenders from losses if the borrower defaults. Mortgage insurance premium protects lenders against losses if a borrower defaults on an FHA loan. This insurance allows lenders to offer loans to borrowers with lower credit scores and smaller down payments. Which type of mortgage allows the borrower to pay only the interest for a set period before beginning to pay off the principal? Is it A, fixed-rate mortgage, B, interest-only mortgage, C, adjustable-rate mortgage, or D, reverse mortgage? The answer is B, interest-only mortgage. Interest-only mortgages enable borrowers to pay only interest for a specified period, typically 5 to 10 years, before they must start paying both principal and interest, potentially increasing monthly payments. What is a key feature of a VA loan that distinguishes it from conventional loans? Is it A, higher interest rates, B, requirement for private mortgage insurance, C, no down payment requirement, or D, limited to first-time homebuyers? The answer is C, no down payment requirement. VA loans available to veterans offer the unique benefit of requiring no down payment, unlike conventional loans, which typically require a minimum down payment percentage. How does an adjustable-rate mortgage differ from a fixed-rate mortgage? Is it A, an ARM has a higher initial interest rate, B, an ARM requires a larger down payment, C, ARM payments remain constant, or D, ARM interest rates can change over time? The answer is D, ARM interest rates can change over time. An adjustable-rate mortgage has interest rates that can change over time based on market conditions, unlike a fixed-rate mortgage, which maintains the same rate throughout the loan term. What is a key advantage of a conventional loan over government-backed loans? Is it A, lower credit score requirements, B, flexibility in property types and uses, C, guaranteed approval for all borrowers, or D, no need for a down payment? The answer is B, flexibility in property types and uses. Conventional loans often have fewer restrictions on property types and can finance second homes or investment properties, unlike government-backed loans, which have stricter eligibility criteria and restrictions. Loan applications and approval processes. What is the primary purpose of the Truth in Lending Act in the context of California loan applications? Is it A, to regulate interest rates set by lenders, B, to ensure borrowers are informed about the terms and costs of loans, C, to provide grants to first-time homebuyers, or D, to oversee the licensing of mortgage brokers? The answer is B, to ensure borrowers are informed about the terms and costs of loans. The Truth in Lending Act requires lenders to provide clear and consistent information about the terms and costs of a loan, allowing borrowers to compare loans and make informed decisions. Which document is typically required by lenders to verify a borrower's income during the loan approval process in California? Is it A, pay stub, B, credit report, C, home appraisal, or D, title insurance? The answer is A, pay stub. Pay stubs are commonly used by lenders to verify a borrower's income as they provide recent and accurate information about the borrower's earnings and employment status. In California, what is the role of a loan underwriter during the loan approval process? Is it A, to set interest rates for loans, B, to negotiate terms with borrowers, C, to assess the risk of lending to a borrower, or D, to prepare legal documents for closing? The answer is C, to assess the risk of lending to a borrower. A loan underwriter evaluates the borrower's financial information and the property details to assess the risk of lending, ensuring the borrower meets the lender's criteria for loan approval. What is a common condition that a borrower must satisfy before a loan is fully approved in California? Is it A, providing a personal reference, B, opening a new bank account, C, purchasing homeowner's insurance, or D, obtaining a satisfactory home appraisal? The answer is D, obtaining a satisfactory home appraisal. Obtaining a satisfactory home appraisal ensures the property's value supports the loan amount, protecting both the lender and borrower in the transaction. How does the California Homeowner Bill of Rights affect the loan modification process? Is it A, it prevents dual tracking during loan modification reviews, B, it mandates interest rate reductions for all loan modifications, C, it requires lenders to forgive a portion of the loan principal, or D, it allows borrowers to choose their loan servicer? The answer is A, it prevents dual tracking during loan modification reviews. The California Homeowner Bill of Rights prevents dual tracking, ensuring borrowers are not foreclosed upon while a loan modification application is under review, providing greater protection to homeowners. California Mortgage Disclosure Requirements. What is the primary purpose of the California Mortgage Disclosure Requirements? Is it A, to simplify the loan application process, B, to ensure borrowers are informed about mortgage terms, C, to reduce the number of required documents, or D, to increase the lender's flexibility in loan terms? The answer is B, to ensure borrowers are informed about mortgage terms. The California Mortgage Disclosure Requirements aim to ensure borrowers are fully informed about the terms and costs associated with their mortgage, promoting transparency and preventing predatory lending practices. Which document must be provided to a borrower under California Mortgage Disclosure Requirements? Is it A, promissory note, B, deed of trust, C, loan estimate, or D, title insurance policy? The answer is C, loan estimate. The loan estimate is a key document that provides borrowers with important details about their mortgage, including estimated interest rates, monthly payments, and closing costs. How soon must the loan estimate be provided to a borrower after receiving a loan application? Is it A, within 3 business days, B, within 5 business days, C, within 7 business days, or D, within 10 business days? The answer is A, within 3 business days. The loan estimate must be provided within 3 business days of receiving a loan application to ensure borrowers have ample time to review and understand the terms. What is a key feature of the closing disclosure under California Mortgage Disclosure Requirements? Is it A, it estimates the costs of the mortgage, B, it details the final costs of the mortgage, C, it outlines potential future interest rate changes, or D, it provides a summary of the loan application? The answer is B, it details the final costs of the mortgage. The closing disclosure provides a detailed breakdown of the final costs of the mortgage, ensuring borrowers understand exactly what they are paying before finalizing the loan. When must the closing disclosure be provided to the borrower? Is it A, 1 business day before closing, B, 2 business days before closing, C, 4 business days before closing, or D, 3 business days before closing? The answer is D, 3 business days before closing. The closing disclosure must be provided at least 3 business days before closing to give borrowers time to review the final terms and costs of their mortgage.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
California-specific loan programs. Which California-specific loan program is designed to assist first-time homebuyers with down payment and closing cost assistance? Is it A, CalHFA My Home Assistance Program, B, CalVet Home Loan, C, Federal Housing Administration, FHA loan, or D, U.S. Department of Veterans Affairs, VA loan? The answer is A, CalHFA My Home Assistance Program. The CalHFA My Home Assistance Program provides down payment and closing cost assistance to first-time homebuyers in California. It offers a deferred payment junior loan to help with the initial costs of purchasing a home. What is a unique feature of the CalVet Home Loan Program compared to conventional loans? Is it A, higher interest rates, B, federal guarantee, C, below market interest rates, or D, no eligibility for veterans? The answer is C, below market interest rates. CalVet Home Loans offer unique benefits such as below market interest rates and low or no down payment options, specifically tailored for California veterans, making homeownership more accessible for them. The California Housing Finance Agency offers which type of loan to assist with energy-efficient home improvements? Is it A, Home Ready Loan, B, Energy-Efficient Mortgage, C, 203 Rehabilitation Loan, or D, Reverse Mortgage? The answer is B, Energy-Efficient Mortgage. CalHFA offers the Energy Efficient Mortgage Program, which helps homeowners finance energy-efficient improvements as part of their mortgage, reducing utility costs and improving home value. Which program offers home loans to California public school employees with favorable terms? Is it A, CalHFA Zero Interest Program, B, CalPlus with ZIP, C, CalVet Home Loan, or D, Extra Credit Teacher Home Purchase Program? The answer is D, Extra Credit Teacher Home Purchase Program. The Extra Credit Teacher Home Purchase Program provides home loans with favorable terms to California public school employees, including teachers and administrators, to facilitate homeownership. What distinguishes the CalHFA CalPlus conventional loan from other CalHFA loan options? Is it A, includes a zero-interest ZIP loan, B, only available to veterans, C, requires a minimum 20% down payment, or D, offers variable interest rates? The answer is A, includes a zero-interest ZIP loan. The CalHFA CalPlus conventional loan offers a fixed-rate first mortgage with a built-in zero-interest ZIP second loan for closing costs, making it distinct in its structure and benefits. California Housing Finance Agency. What is the primary purpose of the California Housing Finance Agency? Is it A, to provide affordable housing loans and assistance to Californians, B, to regulate real estate transactions in California, C, to manage state-owned housing properties, or D, to offer grants for urban development projects? The answer is A, to provide affordable housing loans and assistance to Californians. CalHFA's primary purpose is to provide financing and programs to help low and moderate income Californians achieve homeownership. It offers various loan products tailored to meet the needs of first-time homebuyers. Which type of loan is specifically designed by CalHFA for first-time homebuyers? Is it A, conventional loan, B, California Housing Finance Agency FHA loan, C, U.S. Department of Veterans Affairs VA loan, or D, jumbo loan? The answer is B, California Housing Finance Agency FHA loan. CalHFA offers the CalHFA FHA loan, which is designed to assist first-time homebuyers with down payment and closing cost assistance, making homeownership more accessible. How does CalHFA support low-income families in purchasing homes? Is it A, by providing free housing units, B, by subsidizing interest rates on all loans, C, by offering down payment assistance programs, or D, by eliminating property taxes for first-time buyers? The answer is C, by offering down payment assistance programs. CalHFA supports low-income families by offering down payment assistance programs, which reduce the initial financial burden and make homeownership more attainable for qualifying individuals. What is a key requirement to qualify for a CalHFA loan program? Is it A, must have a credit score above 800, B, must have lived in California for at least 10 years, C, must purchase a home in a designated urban area, or D, must be a first-time homebuyer? The answer is D, must be a first-time homebuyer. One key requirement for CalHFA loan programs is that applicants must be first-time homebuyers, defined as not having owned a home in the past 3 years. Which of the following is a unique feature of CalHFA's My Home Assistance Program? Is it A, provides up to 3.5% of the purchase price for down payment assistance, B, offers zero-interest loans for home renovations, C, allows for 100% financing of the home purchase price, or D, requires no income verification for applicants? The answer is A, provides up to 3.5% of the purchase price for down payment assistance. The My Home Assistance Program offers up to 3.5% of the purchase price or appraised value to help cover down payment and closing costs, making it easier for buyers to afford a home.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
This next section will cover California disclosure requirements and forms. California-specific disclosure requirements. Which document is required to disclose information about the presence of lead-based paint in California residential properties built before 1978? Is it A, Natural Hazard Disclosure Statement, B, Lead-based paint disclosure, C, Transfer Disclosure Statement, or D, Seller Property Questionnaire? The answer is B, Lead-based paint disclosure. The lead-based paint disclosure is mandated by federal law for homes built before 1978, requiring sellers to inform buyers about potential lead-based paint hazards. What is the purpose of the California Natural Hazard Disclosure Statement? Is it A, to inform buyers of natural hazard risks, B, to outline the property's structural condition, C, to provide information on neighborhood crime rates, or D, to disclose the presence of asbestos? The answer is A, to inform buyers of natural hazard risks. The California Natural Hazard Disclosure Statement informs buyers about natural hazard risks such as flood, fire, and earthquake zones, ensuring transparency in property transactions. Which disclosure form is required by California law to inform potential buyers about the property's condition and any known defects? Is it A, Natural Hazard Disclosure Statement, B, Lead-based paint disclosure, C, Transfer Disclosure Statement, or D, Seller Financing Addendum? The answer is C, Transfer Disclosure Statement. The Transfer Disclosure Statement is a California-specific requirement that mandates sellers to disclose any known material defects or issues with the property to potential buyers. What information must be included in the California earthquake disclosure? Is it A, local crime statistics, B, lead-based paint hazards, C, property tax history, or D, seismic hazards and safety measures? The answer is D, seismic hazards and safety measures. The California earthquake disclosure provides information about seismic hazards and safety measures, ensuring buyers are aware of earthquake risks and how to mitigate them. When is the California Seller Property Questionnaire typically used in a real estate transaction? Is it A, to supplement the Transfer Disclosure Statement with more detail, B, to replace the Natural Hazard Disclosure Statement, C, to disclose only financial aspects of the property, or D, to outline the terms of seller financing? The answer is A, to supplement the transfer disclosure statement with more detail. The seller property questionnaire is used to provide additional disclosures about the property, supplementing the transfer disclosure statement with more detailed information about specific issues. Commonly used California forms. Which California form is primarily used to disclose the presence of lead-based paint in properties built before 1978? Is it A, transfer disclosure statement, B, lead-based paint disclosure, C, natural hazard disclosure, or D, seller property questionnaire? The answer is B, lead-based paint disclosure. The lead-based paint disclosure form is mandatory for properties built before 1978 to inform buyers or renters about the presence of lead-based paint, ensuring compliance with federal law. What is the purpose of the California seller's affidavit of non-foreign status? Is it A, to verify the property's market value, B, to disclose natural hazards, C, to confirm the seller's tax status, or D, to outline the terms of sale? The answer is C, to confirm the seller's tax status. The seller's affidavit of non-foreign status ensures compliance with the Foreign Investment in Real Property Tax Act, confirming the seller is not a foreign person and exempt from withholding tax. Which form must California sellers use to disclose known material defects in a property? Is it A, transfer disclosure statement, B, seller financing addendum, C, preliminary title report, or D, residential purchase agreement? The answer is A, transfer disclosure statement. The transfer disclosure statement is a legally required form in California for sellers to disclose known material defects in a property, ensuring transparency and legal compliance. What information does the California Natural Hazard Disclosure Statement provide? Is it A, details about property taxes, B, information on natural hazard zones, C, lead-based paint presence, or D, homeowners association rules? The answer is B, information on natural hazard zones. The Natural Hazard Disclosure Statement informs buyers about whether a property is located in areas prone to natural hazards, such as flood zones or earthquake fault zones, ensuring they are aware of potential risks. In California, which form is used to notify buyers about property tax reassessment possibilities? Is it A, California Property Tax Reassessment Notice, B, Preliminary Change of Ownership Report, C, Buyer's Inspection Advisory, or D, Homeowner's Guide to Earthquake Safety? The answer is A, California Property Tax Reassessment Notice. The California Property Tax Reassessment Notice informs buyers that property taxes may be reassessed upon sale, potentially impacting future tax liabilities and ensuring they are aware of possible changes. Specific procedures for transactions. What is the primary purpose of the transfer disclosure statement in California real estate transactions? Is it A, to provide a legal description of the property, B, to disclose known defects and issues with the property, C, to estimate the market value of the property, or D, to outline the terms of the sale agreement? The answer is B, to disclose known defects and issues with the property. The TDS is designed to inform buyers of the property's condition, highlighting any known defects or issues. This helps buyers make informed decisions and reduces the risk of future disputes. Which party is responsible for completing the natural hazard disclosure statement in California? Is it A, the buyer's real estate agent, B, the buyer, C, the seller, or D, the lender? The answer is C, the seller. In California, the seller is responsible for completing the natural hazard disclosure statement, which informs buyers of potential natural hazards affecting the property, such as flood zones or earthquake faults. When must the lead-based paint disclosure be provided in a California real estate transaction? Is it A, before the buyer is obligated under a purchase contract? B, after the closing of the transaction? C, only if requested by the buyer? Or D, during the final walkthrough inspection? The answer is A, before the buyer is obligated under a purchase contract. The lead-based paint disclosure must be provided before the buyer is obligated under a contract to purchase a property built before 1978, ensuring awareness of potential lead hazards. What is the significance of the California Home Energy Rating System in real estate transactions? Is it A, it determines the property's market value? B, it is required for all real estate transactions? C, it is used to calculate property taxes? Or D, it provides a standardized rating of the home's energy efficiency? The answer is D. It provides a standardized rating of the home's energy efficiency. The HERS provides a standardized rating of a home's energy efficiency, helping buyers understand potential energy costs and identifying areas for improvement, which can influence purchasing decisions. Which document is used to inform buyers about the presence of a septic tank on a California property? Is it A, Natural Hazard Disclosure Statement? B, Seller Property Questionnaire? C, Transfer Disclosure Statement? Or D, Lead-Based Paint Disclosure? The answer is B, Seller Property Questionnaire. The Seller Property Questionnaire is used to disclose the presence of a septic tank, among other property-specific details, ensuring buyers are aware of such features and any related maintenance.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.